Hey, Mark, how are you, buddy?
Surviving.
All right, good. Really great to have you here. Thanks a lot, team, for everything. You want to say hi to Mark, Blake?
Merry
Yeah,
Christmas
I'd love to
to
say,
everybody.
happy
Happy
holidays,
holidays.
Mark.
Happy holidays, guys. Good luck for the new year.
Hey, yeah, Merry Christmas, Dream Team. I
Merry
hope
Christmas
Santa.
to
Merry
you, Dale,
Christmas,
and
everybody.
You too,
Merry
Yeah,
mate.
Christmas, everyone.
I hope that Santa brings you. Well, Ryan, I hope he just brings him coal. So stay warm. Anyway, Merry Christmas. Hug your families and enjoy the holiday. Thank you, guys. All right, so Mark, great time to have you here. What's top of mind going into 2025? What do you think the major themes or headlines that you think are in front of us with the new administration coming in? You know, all the changes, um, tariffs, etc. I know that you're a thinker, and I know you're looking ahead. What are you preparing for?
About everything, huh? Over the weekend, we learned maybe the U.S. wants to take back the Panama Canal after all,
Yeah,
and we
yeah,
might want to take by Greenland of all things. So, I think that really captures uh, the uh, the great degree of uncertainty, the great degree of rhetoric. The I'm born here in the U.S. I have
yeah,
a master's in American history. I studied American history, and
yeah,
yet. Uh, what a confusing period of time that lies ahead of us. Most of the
yeah,
time, as an American, I'd like to think that we're the good guys. That yes, that sometimes we do things wrong, but the heart's in the right place.
yeah,
And the rest of the world, countries like China or Russia or Iran, they're the cause of the major disruption in the world. And yet, here we sit here a month before the inauguration, the U.S. has become the great disruptor, and it doesn't please me. But here we are, dollar very strong, Federal Reserve interest rate policy diverging from the rest of the world, and this is shown in the divergence between, say, I look at the 2 year to influence short-term
Are
interest
you
rate influence.
are you showing? Do you want to share your screen, Mark?
No, I don't have anything
Oh,
really to show,
oh,
except
okay. All
I
right,
would point
go
out
ahead.
just that, yeah, the 2 year interest rate differentials to
Yeah,
me are the key in right now. So the meme in the market,
okay,
monetary policy divergence. So you look at
right.
Canada, you guys were right. Canada's GDP came out a bit stronger. Canadian dollar doesn't care. And the reason the Canadian dollar doesn't care is because the US premium over Canada, 2 year premium, is the widest since 1997. That is,
Wow.
most of us could be indifferent whether we hold US dollars, say US T bill or Canadian T bill in reserves, or as our margin money. But the market says that they're paying you, the Americans are paying you over 200 basis points to be long US dollars over Canada. So which way is Canada going to go? Same thing with
Yeah,
Europe. I look at for the euro, I look at the 2 year US German differential. We're at basically the widest we've been for some time, which means that you're paying to be long dollars over euros. So which way is the
right.
dollar going to go? I think the euro is going to break parity early next year. Maybe you're right. That when that all this is there to buy the rumor, sell the fact on Trump. I think it's more complicated than that. I think Fed policy has a big role to play in explaining the dollar's strength. But there is a chance that we get a little bit more in the dollar. I think the euro below parity. I think sterling below 122. So that gives us
That
another
I could
three
see.
cents. I think dollar yen tests 160 again. So I think that this dollar has a bit more room to go. Earlier
Yeah,
this year, I thought that we might have turned, but with the election policy change, I think we got to still be bullish the dollar for a bit more.
okay. All right. And what does that say about risk and rates and the Fed? Um, do you think, I mean, this hawkish cut, do you think that perhaps Paul doesn't really have anyone to answer to? He's not looking for a reappointment. I don't think that he's a fan of the incoming president. Uh, he doesn't have to. He could basically act pretty independently here and not bow to political pressure. How is the administration going to get a lower dollar? Uh, a friend of mine said, if you just pay attention to what the administration wants, they usually get it when it comes. concerning the dollar. Can they? I mean, you talk the bull case here. How can the administration, can they just jawbone the dollar lower? How, what has to be done? Do we need like a Plaza Accord to take the wind out of the sails of the dollar? You know, you always have to look at both cases. We heard the bull case for the dollar. What would be the bear case for the dollar?
Yeah, Dale, I think that, I'm looking at you on the screen and I see that I have as much gray hair as you, which means a lot of
Yeah,
scar tissue, which, and we've been down this road before. Before they reached the Plaza Agreement, that was in
yeah,
September
yeah,
1985. There was months where policymakers tried talking the dollar down.
yeah,
There was even intervention to try to knock the dollar down.
right.
Of all the things that really move the dollar, I don't think that wishes are among our top on the list.
I like that.
And
All
so,
right. You can't
I
just cross your fingers on this.
yeah, no, I think that, and that's also a very American point of view that somehow the Plaza Agreement was good. We think it was a high point of central bank coordination, driving the dollar down from ridiculously extreme levels in the early 80s, thanks to the
Yeah,
policy mix the U.S. had. Reagan was expanding fiscal policy, social spending, yes, tax cuts, yes, defense spending, yes, while Volcker was having his foot on the brake at the Federal Reserve. That policy mix is the most bullish for a currency. That is what drives the markets. It's not that
yeah,
Trump may want a weaker dollar. The Plaza Agreement in Japan is seen to be a capitulation. The source of their problems, this end of the Japanese bubble, the demise of the Japanese economy begins with the Plaza. China sees it that
interesting.
same way. They see the U.S. Pressure Japan, devaluing the Japanese yen, leading to this lost decades. China doesn't want to go down that path. Moreover, the Chinese currency is not nearly as undervalued as the yen or the euro. I'm not smart enough to come up with my own models. I use the OECD's purchasing power parity, and it's only useful in the extreme. Day to day, it doesn't really mean much, but we're at an extreme. According to their measure, the euro and the yen are more than 50% undervalued. The
Wow.
RMB is not nearly as undervalued. Yes, they have a big trade surplus, but you can't go from a trade surplus to the valuation of a currency. It's much more difficult. For example, the Eurozone has a large current account surplus. They have a weak currency. Japan runs a trade deficit, which is perhaps unknown to the incoming US administration. Japan runs a trade deficit, merchandise trade deficit. It imports more than it exports despite the weakness of the yen. They have
Right.
a current account surplus, a broader measure, which includes capital flows, like profits, like interest that they earn on US treasuries. When they repatriate that, that counts as part of their current account surplus. So I think the world is much more complicated than this simple trade surplus currency taking advantage of poor old United States. So I
Well,
suspect that, I'm sorry.
no, that's okay. Go ahead, Mark. You finish your
Well,
thought.
I just suspect that this is going to be tested. You can't say a bunch of things and gain credibility in the market. You can't talk about taking the Panama Canal because they charge too much, or buying Greenland when it's owned by Danes, a NATO member, which means it's in safe hands. And so this is just America sort of on the world stage, but the dollar is still is rewarded because not of what happens in Washington D.C. or not from the White House, but because of what's happening the Federal Reserve compared to other central banks.
Okay. How does tariffs complicate the trading aspect in FX? What are your expectations? Everyone's saying, no, it's just being used as leverage. I don't think so. I mean, I believe that he talked about 100% tariffs on any of the countries that want to participate in the BRIC currency.
Yeah, well, I don't think we have to worry about that. I don't think there's really a brick currency. And this is
Well,
what Trump does.
yeah,
He makes
all
these
right,
claims, and then he showed, for example, among the first things he did after being reelected, he says he's going to put a tariff on Mexico and
yeah,
Canada. And he
right.
says the Mexican president, I think, shows the way forward. What would we tell our children? What would we tell our colleagues if they face a bully? We'd
Yeah.
say push back. The bully is hollow. They're like those puffer fish that blow themselves up to look big, intimidate you, but all you have to do is stand up, stand your ground. And that's exactly what the Mexican president did. She
Yeah.
writes a letter to Trump and says, listen, your fentanyl imports are down a lot. Immigration from the southern border is down a lot, despite what you might have said or might have thought during the campaign. And she
Right.
says the guns that they're confiscating from criminals in Mexico come mostly from the United States. She
Yeah.
pushes back. Trump says,
So did Trudeau.
victory. She's going to defend the border. Trudeau,
Yeah.
to your point, goes down to Florida, and he's mocked. He's talking about being a governor of the 51st state. You stand up to bullies, they back down. Greenland and Denmark are going to say, no, we're not for sale. Panama is very clear. The Panama Canal is Panama's. It's not controlled or influenced by other countries, Europe, China, whomever. And I think this is what's going to happen. Other countries are going to push back against Trump. And this American
Right.
nationalism breeds foreign nationalism.
Yes.
So I think this is where the sort of rubber hits the road. But again, this is all like politics. When you think about the tariffs, why weren't the tariffs so inflationary in the first Trump term? Because they targeted the tariffs to two things: intermediate goods. Those are goods that are like semi-finished, intermediate goods that go into finished products. That's not necessarily passed on to the consumer in CPI. Secondly, you tariff consumer goods where there's easy to find replacements. And that doesn't always work for all consumer goods we buy from China, but you look at what we buy from China, and it's really pretty much electronics and toys from China, but electronics, and that includes all those things with batteries. So I'm not really concerned that the tariffs are going to be inflationary. I think that the economy slowing down is going to absorb some of that pressure, and I think that the tariffs will be a brake on the economy more than inflationary.
Okay. And your view on risk in 2025?
Yeah, risk.
Did the
It's going to
character of the market change on this bear raid last week?
I'm not sure that's changed. I mean, I think that uh, added volatility, and I think this is what I think risk is in the capital markets is volatility. Is volatility tells us sort of what's mathematically possible. So if you have the higher the volatility, whether it's the VIX, the move, or individual currency pairs or equity pairs, the more that's possible, which means that margin, the cost of holding the position, becomes greater. And so, yes, I do think that we're in for some volatility, but as long as volatility is not agnostic towards direction. When volatility falls, tends to be when the stock market rises, and so
Right.
low volatility means continued bull market. So I think there might be some juice left in the stock market. I've lightened up, but I haven't gone short anything. Um, I think there might be some more upside, but the market's rich to me. I'm still looking
Yeah.
at ways to diversify despite the underperformance in Japan and Europe over the years. I think that the dollar is going to give us a tailwind for those markets, perhaps later in 2025.
Okay. Interesting. I wanted to ask you if you had a view on real estate.
Tell you the truth, Dale, I just sold my New York apartment.
That's why I wanted to ask you. I forgot. Normally I would have been right on it, and I thought about it a day or so after our interview. I go, I wonder why Marc sold his apartment in New York. He
Yeah, no,
maybe,
it just made sense to me. I do like that. I mean, I sort of like what Mark Twain said. You got to buy real estate because they stopped making it. But I'm a bit more
right?
selective. I think I'm looking for other opportunities, and not necessarily residential, maybe commercial real estate in
Yeah,
different parts. But yeah, I mean, I think when we think about owning a house, I think the best way I could think of it is to think of it as do you want to fix or float your rent? When you buy a place, you're really fixing your rent. That's your mortgage. You're fixing
right,
it. You're fixing your cost of shelter. And if you just
right.
decide to rent, you're letting it float. And
Yeah,
there's all these formulas and all these models that help you make that choice. It depends on your tax bracket and that sort of thing. But the idea that you can buy real estate and get rich, maybe. But I think this is one of the problems of this generational divide in the United States, but also in other countries, where young people cannot afford to buy houses. And that affects household formation, which affects the
yeah.
broader economy. And so it does concern me that house prices, not just in the US, but in many high income countries, is beyond the means of most people.
Yeah. Okay. Well, I know a few people think that's changing. They're pretty good. Check out Melody Griffith, Melody Wright's work on housing. Anyway, so that's why I thought. I thought maybe you thought there was that it was overvalued. It was time to ring the register. You wanted to get out of New York for a while.
Yeah, I'm afraid that I married up. My wife grew up in a house. I
Okay.
grew up in an apartment, and we compromised and bought a summer house not far from Bruce Springsteen in Asbury Park,
Oh,
and
cool.
a
Yeah.
smaller place than his, of course. And
Yeah.
during COVID, it just seemed to be the right thing to do. Move down to the shore, more sunlight, more space, and neither
Yeah.
my wife nor I have killed each other yet, so all's good.
Well, Mark, it sounds like we're gonna, Trump too. Do you remember trading during Trump 1.0? Did you like, you know, the trading environment that, I mean, he did create some more volatilities. There were cartoons of him, making a phone call about a tariff and having all kinds of monitors in front of him,
Yeah,
so, you
I
know,
think that, we should recall just the lesson I learned in Trump 1.0 was to take demand seriously, but not literally. People like us, Dale, like your team at FX Analytics, people, we write a lot. We use words. We got to be precise with words. Look at what we do with Fibonacci retracements, 0.1%.
yeah,
We're measuring these things, and on
right,
currencies, you think about the euro. Right? We're not just talking about tenths or even hundredths of a penny, but the real spread is a thousandth of a penny. We take
yeah,
things in the markets very precisely, and almost like we're making some kind of German or Swiss machine tool. But it seems to me that the new administration doesn't take language quite as seriously. They use it more loosely. We've got to take them seriously. They've got a lot of power and influence, but I don't think we ought to take them literally. And that means whether it's the tariffs, whether it's Greenland, whether it's uh, Canada becoming a 51st state, this is just like noise. Try to keep an eye on the signal, which makes it harder. But that's my best advice: is keep an eye on the signal and try to ignore the
yeah.
noise.
All right. Speaking about ignoring the noise, have you seen any drones out there?
I haven't seen any drones. It says more about my eyesight though than the skies.
Okay, I wanted to know because I want you to be here for your next interview. I don't want any alien abductions to pull
Yeah,
you out of here so we can't talk currency. So, okay, yen, could we have sometime this year? I mean, I think you said 160. That's the old highs. Could we have a yen carry trade problem 2.0 if we get another wave like this in 25 from wherever it starts? Some people think it's going to start, around here and that we could have something like this again, that there could be a big break, which, they're so tightly correlated with yields. Where are you at on yields? This has surprised a lot of people. Are we going to 5% or are yields peaking in your view?
yeah, that's a good question. I'm a bit surprised that we even got above those November highs. Um,
Hmm.
so I know there's some people talking about 5%. I don't quite see it because I think what happens, and I think we began seeing this a little bit at the end of last week, where at some point the rising yields hurt the stock market. And then
Yeah,
when the
that's
stock market sells off sharply, the bonds get a better bid. So
yeah,
I don't have a strong feel for how this relationship pans out over the course of the coming year. But I do think that we probably have to look for slightly higher yields first. What I'm looking at is the next jobs report, and the next jobs report looks like it's going to be around the early estimates around 150,000. So I think that's what we need to see is a slower labor market, and that'll take pressure. That'll get the Fed. I think that speaking about Powell and this pivot, first he tells us we're not so worried about inflation. We could be more worried about unemployment. Now he tells us, oh, inflation's back on the radar screen. We're going to be less dovish than we thought we were in September. And I think the Federal Reserve is going to swing back towards the labor market. And I think that my bet, just like when the Fed cut in September, many people, including myself, thought that interest rates might have bottomed with the Fed's 50 basis point cut. And now
yeah,
with the 25 basis point cut, I think that maybe interest rates came close to a peak. We might have to press that a little bit, but I think I think that we're closer to a peak in interest rates than we are to 5%.
Okay, because TLT has to get back above 94 in my view. Otherwise, it's starting to look like it could open the door. I mean, 100 to under 90 already, 10 handles, and it's just kind of looks like a breakdown under 90, measures 80. The third drive would come in all the way down here, Mark, at 72.42. That's quite a bit higher in yields on the long end than we had in October. Could we have, it kind of reminds me, especially if the market does what some of the bulls are saying, and we're going to go to 6,400 before we have a big correction. Some people are in the other camp. But if rates keep going up and the market makes a new high, and I could see how people might be talking 6,400 if we clear 61, we'll have like an 87 setup with disintermediation of rates keep going up, the market keeps going up until the rubber band snaps. Could
Yeah,
that happen?
that's a scary scenario because I think that before we get there, we'll see all kinds, like we saw financial stress. We see what happens with the banks. And remember, we've got still a big concentration of commercial real estate loans maturing. Uh,
Yeah,
I think that the U.S. economy can do well in a low interest rate environment, but as we move into a medium to higher interest rate environment, we're going to see all kinds of signs of strain, and that
yeah.
itself will constrain the rising yields.
Okay. All right. So the only thing that's really going to save the bond market is economic weakness.
Economic news, and that economic news is a
Weakness.
weaker economy and financial fragility still.
Okay. Well, I think we have that, or we wouldn't have been down 180 handles on Thursday in the S&Ps. Yeah, it says a little bit about structure. I mean, you and I have been charting long enough, Mark, to know that when a market does something like this, I mean, I was talking about December being a great month for a bear raid, and you know, that was definitely a nice little bear raid. This candle right here, broke a wedge, did everything. It's like the character of the market has definitely shifted from these kind of candles to extremely wide ranges. The ATR is like tripled. Um, so I think we'll need seatbelts this year.
Yeah, I think that, I mean, there's this ancient Greek who says that if you give him a long enough stick and someplace to put his feet, he can move the world. And that's our position, sort of masters of the universe, huh? But the
Right.
problem is that there's nothing solid to put our feet on anymore. You can't
Yeah.
count on the U.S. Whatever course we were on from the end of World War II through 2016, we're off that course now. And the re-election of Trump sort of reinforces a new path. Same thing with China. China was on a path from roughly 1980 to Xi, and
Yeah.
Xi's taken China off the path that it was on.
Yeah.
Europe is still mired in this
Yeah.
almost a 19th century dilemma: what to do with Germany. Kissinger once said, "You got to pity Germany. Too big for Europe, too small for the world." And a lot of the EMU, monetary union, all this is meant for the Lilliputians to tie down Gulliver, Germany. And
Yeah.
that seems to be now
Interesting.
they've anchored themselves to sort of the sick man again in Europe. Public investment is horrible. You know the story, relying on French nuclear energy because the Germans have turned off their nuclear power.
Yeah.
Uh, Japan has the first minority government in its history. And the world looks to be a mess. And so maybe it's like what Keynes said, that the markets were like a beauty contest. And that the idea is to pick not who you think is the most beautiful, but to pick who everybody else is going to think is the most beautiful. And now we have an ugly contest, and it just happens that the US is somewhat less ugly than other parts of the world.
Great metaphor. And let's wrap it on it pays not to be the homeliest country on the planet. So,
But the
Mark,
homeliest guy at the dance, Dale.
yeah, well, I wouldn't know what that was like. I do empathize with them though. So, Mark, I tell you, all the years that we've been able to talk and share, I always look forward to our conversations and want to wish you and your family great holiday season, happy new year, and great health next year and your best year ever in any arena that you want, more flow to come to.
Thanks, Dale. It's very, very kind of you to say. And there's one thing I would just add. When we play a lot of game theory, just to game out situations, and it seems that the winning strategy over the long run is not just tit for tat. It's not just do unto others as they do unto you, but showing some mercy. And I think in this holiday season, it's just good to keep that in mind. Be merciful. Good
I
luck to
love it.
everybody.
Yeah. Amen, Mark.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.